It might feel difficult to save money when you have low income, but don't allow a meager income to prevent you from achieving your financial objectives. You shouldn't believe that your objectives, like saving for retirement or a down payment for a home, need to be put on hold. Fortunately, there's some inventive strategies for saving money on a tight budget. Even when your income isn't as high as you'd like it to be, you can still save money, but you'll need to get creative. Low-income individuals struggle to save because they either don't have enough money after costs or do not have a saving habit. No one can deny the value of saving, regardless of how they handle their finances. But regardless of income, everyone can save with discipline and good money management. Gather yourself, make a good plan, and appreciate your independence because, as said, savings offer you the opportunity to enjoy life on your own terms. Think about setting yourself the goal of saving more money while maintaining a balanced budget that includes pleasurable activities. Do you find it difficult to save money on a limited budget? Setting money away each month is probably the last thing on your mind when every paycheck you receive is barely enough to meet your expenses. Saving may rank last on your list of priorities if you're worried about how to make ends meet on a low-income budget. If, however, that isn't the case, you could be more interested in money management tips for low-income families, or you might be saving for a property. Your ability to save as a habit is independent of your income. All you have to do is decide to set aside some money, whether it's 5% or 10% of your income. Once you develop the practice of saving money, even tiny amounts, it won't seem strange when your income increases. You should transfer your attention to saving for yourself and anybody who looks to you as a provider and a role model, regardless of whether you're a single parent or head of a home with multiple incomes. Every week, deposit as much money as you can into a savings account and keep it there in case of emergencies. Spend later, first save. Every time you're paid, set away, say, 20% of your income for savings before doing anything else. In this manner, you'll set aside money each month and know exactly how much you'll have at the end of the year. Be careful to save money for yourself even if you have bills to pay off, since emergencies usually arise out of the blue. This is important because it emphasizes forward thinking, which is essential for learning how to manage money on a limited salary. You want to make sure that every dollar counts when your income is low. Ensuring that your income is allocated appropriately is made easier by splitting it up into various savings accounts. This has the potential to make managing your money simpler, particularly if you automate the process. Have a primary account where you deposit your paychecks. Create one or more savings accounts as desired. You may, for instance, have different accounts for your emergency fund, home or car maintenance, clothing for your children, home savings, etc. For additional savings accounts, you could be required to pay service fees depending on your bank or credit union. Find the most affordable method of organizing what you need by shopping around. Determine how much you want to deposit into each savings account each month based on your budget. Create regular automated transfers from your primary account to your savings account. You can do this by using your online banking system. If you need assistance, contact your bank. Once you've put everything up, you can set it and forget it, allowing your savings to grow on its own. When you do need to use one of those accounts, you may do so without having to worry about depleting your other savings objectives. You could use just one account if having too many is complicated, and keep track of how much money is going toward each goal in a notebook or spreadsheet. There isn't really a bad way to go about it. Figure out what suits you the best. US researchers did a study that claims, according to the Bureau of Labor Statistics, housing prices might be among your highest outgoings. Imagine if you could lower your monthly housing costs by a few $100s. Your savings amount and general quality of life may both significantly improve with that sum of money. Therefore, go no further than your own house if you need to learn how to manage your money on a limited budget. You can downsize as one approach to lower your home expenditures. A modest home or apartment may be an option to reduce living costs. You'll probably save more money if you can live in a smaller area. So next is to change your location. Real estate values are greatly influenced by location. So even though it would need a change in lifestyle, relocating from the city to the suburbs may be economical in some circumstances. The last one would be to rent out a room. You might lower your housing bills by renting out whatever spare room you have in your house. A wonderful house hack is to convert a portion of your home into rental space. This may provide you with enough passive income to improve your financial situation. Think about long-term renters or transient rentals made possible by a website like Airbnb. Consider your options carefully and select the one that best suits your needs. Finding a cheap place to live might radically change your financial situation. The next thing you should do to save money is by eliminating your debt. You may be prevented from accomplishing new financial objectives because of debt. Your budget may not have any room for savings at the end of the month due to the ongoing financial pressure. Make paying off your debt a top priority. The effort required to pay off your obligations will pay off in a simpler life and peace of mind. The money you were spending for credit card payments and other debt repayments such as school loans can now go towards savings. Debts like credit card debts, school loans, and other obligations might prevent you from achieving your financial objectives. This is because it'll take a very long time to pay off the total balance due to the interest's constant growth. Set aside a little amount each month for debt repayment when creating your budget, and make sure to pay off high interest bills first. Pay yourself first and see saving money as paying yourself. Although it may not have occurred to you, the majority of our revenue is used to pay other people. Prior to considering their savings, people often pay their rent or mortgage, food, home expenses, and other fees. When you eventually get around to saving though, there probably won't be much money left if you worry about everything else before your savings. Because the money you save stays in your pocket and not someone else's, saving money is like paying yourself. The money can then be used to further your savings goal and support your family through difficult financial times. So you should prioritize paying yourself first, which entails conserving money. In other words, determine how much money you want to set aside each month for yourself and pay yourself first, not after paying your other bills. Having a positive outlook on money is crucial. It's thought over matter. No matter how much money you make, having a positive attitude about money can help you maintain your financial discipline. Accept the responsibility for your previous financial blunders, which may have contributed to your current financial issues. You'll develop a more positive attitude about money by forgiving yourself. You're not defined by your error. Liberate yourself. Recognize your money attitude and comprehend how you make financial decisions. Have faith that you can modify your financial behavior. Recognize the pattern and the underlying beliefs and routines you have regarding money. Do you adhere to the saying, "you only live once," to the point where you just keep traveling regardless of your precarious financial situation? Yes, we only have one life to live. But a lot of us are likely to live to a ripe old age. It's best to begin saving right away, right? Stop comparing. What you observe in the life of others doesn't necessarily reflect their true financial situation. You'll feel unpleasant as a result and lose focus on your objectives. It's good advice to limit your use of social media if you experience sadness or depression while doing so. Write down at least one item each day for which you're grateful. It could be either monetary or private, and read the list whenever you're feeling down about your finances. It could be time to make spending cuts if you aren't able to save as much money as you'd want. Determine the non-essentials you can go without, such as entertainment or eating out, and look for methods to cut costs in your set monthly bills as well, such as your mobile phone plan and auto insurance. Consider looking for other free activities, like you can discover free or cheap entertainment using sites like local event calendars. Review recurring costs and cancel subscriptions and memberships that you don't use, especially if they renew automatically. Compare the costs of eating out with cooking at home. For the times when you want to reward yourself, you could look into local restaurant offers, but the majority of your meals probably should be cooked at home. With that said, pay closer attention to your food budget. Any budget can suffer when food expenses are included. It might seem tough to stay within a food budget when there's a continual temptation to eat prepared cuisine at a restaurant. When it comes to saving money on a low salary, this is an excellent area to really concentrate on. About 40% of the average household's food expenditure is spent on eating out, so try to reduce the amount you spend at restaurants. Meal planning is one of the greatest methods to avoid impulsive food purchases. It's simpler to drive home without stopping at your preferred takeout joint if you're already aware of what you're intended to have for supper. Try a 30-day meal planning challenge to see how you like it, as meal planning might take some getting used to. Last but not the least, watch your grocery budget to avoid going overboard. Check your pantry to see if you can put together some dinners with what you currently have. The cash envelope approach could be a wonderful choice if you have trouble keeping track of your expenditures. It's crucial to learn how to manage your finances on a tight budget, and this strategy might be useful for you. The cash envelopes could make you more aware of your expenditures. As a result, it could help you recognize bad spending patterns and learn how to manage your finances on a tight budget. You could concentrate on changing your spending patterns if you're more aware of your preferences. It might be difficult to think about how to save money on a low salary, but don't let that stop you from living the life you desire. Spend a moment being sincere with yourself about your present financial situation and your financial objectives. Discover the drive to continue saving money. Start by addressing each piece of advice on your own terms, one at a time. Think about making the initial move right now. And once you've done that, as you advance, discover more strategies for saving money on a tight budget. Thanks for watching, and check out our other related videos. Please click the like and subscribe button to keep the videos coming. Comment down below and tell us how we're doing. Till next time.